Hello, 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 hello. Hi all, and welcome to another edition of Midday Market Review, live trading, key trading levels and trading setups for popular markets. My name is Phil and I'll be your presenter today. So let me just see, just checking here that this is all okay. Checking. So I'll just wait for a couple more minutes and then we can start properly. So this should all be okay. Yeah, it looks like it's okay. Brilliant. There we go. Just wait for a couple more minutes and then we can start properly. So this should all... Thanks, Robert. Excellent. Okay. Now, for those of you who haven't seen this before, I'm going to go through this very quickly. So I'm going to say hi to a few people who are watching, but this is me. My name is Phil. I'll be your presenter today. If you're looking for the community of traders, check out TraderCast.com. If you're looking for the education, check out mytradingskills.com. Anything that I do here is basically just a proof of concept of what we're teaching in the courses as well. Over the past 10 years, I had the privilege of speaking in front of various different industry events, and I also had the opportunity to teach many people how to trade. Some of them were brand new, and some of them were intermediate or experienced traders who needed help with a specific area of their trading activity. Now, big disclaimer, since I'll be talking to you about live trades, and I have a live trade open right now. I'm long FTSE. I'll show you that in a minute. This is not the advice. This is basically my opinion and experience, and what I'm really trying to do here is I'm trying to show you a practical application of what I think a beginner trader should be able to do. So there's no complicated indicators here, no complicated strategies. It's very simple trend following, price action based on economic data releases, supported by fundamentals and triggered by technicals. That's basically what it is. And current open positions, I'm long FTSE at 72.52 and I have about 80-point stop on this trade. It's a swing type trade. I'll talk to you about all of that in a minute. So I'm gonna close this for now, and I'll talk to you about the logic why I decided to go there, why I opened that trade, and then we can cover anything else that you need covered. So if you need something else covered, let me know. I'll be happy to do so. Just ask. Very quickly before we go into the pre-US Open and things that we should be paying attention to before we go live. This is FTSE in a daily, or UK 100 in a daily time frame. We are seeing this massive sell-off here, big massive red candle. However, I feel that this could be overextended reaction to the downside, and there is a possibility of an oversold bounce back, especially since we are considering this low here from mid-December of 2021. Then we have this low here. I believe that's middle of January of this year, so 2022. Then we have a cluster of these lows here, and then cluster of these highs here from March. So support, resistance, support, resistance, and so on. So that level was tested over and over again. So if I open this up in a shorter term time frame, you can see there is a big sell-off, and now this is the 4-hourly candle which is forming. This 4-hourly candle is not finished just yet. We are coming towards the end of the trading activity for European markets, because European markets will close in about 2.5 hours or so. But I think we could see a continuation of direction which could be triggered by what's happening or what happens in US going forward for today. This is the hourly time frame, so we have high, lower high, lower high, lower high. So this is a counter trend trade, and you can see that there is 1, 2, 3, 4, 4 big candles of the selling pressure here. I can zoom in and show you what I mean by that. Big selling pressure, big selling pressure, big selling pressure, big selling pressure, indecision. So this little indecision was a good sign. Keep an eye on it, something might happen. That was followed by this candle with a big wick at the bottom and a small head on the top. There is a little bit of a wick on the top. I normally would prefer to see this type of candle without the wick, but it's okay, it's fine. And now there is another candle which is forming. It's not ready just yet. This candle just started forming as well. If I go to a 15-minute time frame, this looks like a little double bottom. If I go in a 5-minute time frame, you can see low, high, lower high, lower high, lower high, low, lower low, lower low, lower low, lower low, and this looks like a potential little breakout. It's forming here. From the intraday point of view, there is a consolidation here. I'm paying a close attention to what's happening here, and I will react to this very quickly. So these blue lines are my support, these red lines are my resistance, and I'll show you the trade right now, and then we can go and check what's going on with this other markets and what we should be paying attention to going forward. I was speaking to Robert earlier on about DAX. DAX is forming a very similar pattern. Crude oil as well, there's an opportunity there as well, and I'll talk to you about all of that in a second. So let me show you where I am with FTSE. Okay, so this is my FTSE trade. This is open right now. Here we go. I think you can see this now. So this is the hourly time frame for FTSE 100 cash. You can see that there is that indecision here in an hourly candle, which is then followed by the second candle, and now we're in this third candle here as well. My point of entry is here, 72.52, I believe it's, yeah, 72.52. That's what I got filled, but I was looking at this 72.50 level. My stop is about 80 points below, which is a generous stop loss to begin with. And my initial take profit is up here, 7,400, which gives me almost 2 to 1, almost 2 to, well, it's just above kind of a risk to, sorry, just below risk to reward ratio. So what I would be looking to do from the intraday point of view is potentially look at these lows down here as possible take profit levels or partial take profit levels. So if the price does go there, I might be looking to take some partial profits because we have high, lower high, lower high, lower high. So there could be a little trend line here, so there could be a little bit of a pause. We also have the cluster of these lows here, so if the price does rally there, we could see a reversal from there as well, therefore continuation of the current more dominant prevailing trend. So that could be a good area for potential partial profit taking. Breakouts above that level, 7,330, 7,350, kind of zone of about 20 points, could potentially open the way for a push higher towards 7,400. Yet again, nice and round number. Breakouts above that level, 7,500, which is this low here, and then this consolidation range. That's another level for potential take profit, and so on and so on. So far I'm just leaving this running. My current P&L is showing a profit of 180 euros. And all I'm going to do now is I'm going to reduce the amount of risk on this trade. So what I'm going to do is I'm going to move my stop closer to the entry. Not exactly, but I'm moving my stop about 29 points below the entry, 29.5 points below the entry. I'm still carrying the risk, but I'm no longer risking 80 points. I'm currently risking just below 30 points, and I'm going to pay attention to this and let this run and see if I can catch a little bit of a breakout to the upside. What you're seeing here is this is a 15-minute time frame now. Let me just zoom in and I'll show you how this looks. So this is that consolidation range that I was telling you about. This is the consolidation range that I was telling you about. So from the risk to reward ratio point of view, it's making more sense now because it's a 5-to-1 risk to reward ratio now. But I'll wait and see, and I might take some partial profits, move the stop at break even, and decide what I'm going to do with this trade throughout this session. I'll keep talking about this trade going on. There are a few other things that I'm looking at as well. So I'll just say hi to a few people who are watching, and then Joao and Angelo, Anthony, Rocky, Carvalho, Daniel, Mari, Uzi, Rose, Kay, Robert. I can just see a few people in, and see a few people. Hey Samuel, how are you? Hi Samuel. How are things? Test. Okay, that's better. Sorry. Just knocked my microphone out of place. Are you looking for anything, Samuel? Do you have any trades open? Is there anything of interest? Hey Hamid, how are you? I thought you'll be in TraderCast as well. Now, the other thing that I want to talk to you about, I think I was speaking to Robert earlier on. We were talking about DAX, and DAX is coming to a very similar setup as FTSE. So this is DAX, or a German 40. If you are trading on margin, you probably recognize this as a German 40 index. There's quite a severe selling pressure here. So you can see that on this chart, I have my moving averages here as well. 20, 50, 200. Normally I would be just showing you the plain chart with price action and nothing else on. Just realized I probably left the different template on. So don't, if you're brand new, don't be confused. None of this is really complicated. It's fairly straightforward. If you need to know more about what things are, just ask, and I can possibly point you to a place where you can get that information from. Most of this information is free, but yeah. So where are we now? So we have downtrending market in DAX. I was talking to somebody else early on who was paying attention to what's happening with Bitcoin as well, and Bitcoin was plummeting last time I've heard. It was below 33,000. So breaking news and kind of news feeds are all talking about that stuff. Bitcoin drops below, here we go, CNBC, Bitcoin drops below 33,000 to hit its lowest level since January after shock sell-off. Cryptocurrency is now down more than 50% from its peak of 68,990 in November 2021. So loads of these kind of breaking news coming up, and so markets are a little bit volatile as well. So I'm gonna leave that for now, and I'll talk to you about what's going on with US markets very shortly, because they're due to open in about 12 minutes time. But I do want to cover DAX because I know some of the other members were looking at DAX earlier. So DAX is downtrending, quite a severe kind of selling pressure, triple top here, or shoulder, head and shoulder, neckline, loss of neckline, sell off. And if you don't know what I mean, that's what the neckline is. So shoulder, head and shoulder, sell off, retest off, it goes lower. Now this would be a little bit more precise. So low, 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 loss of support, retest, off it goes. So this is quite a severe selling pressure. Now, from the kind of intraday point of view, we are seeing that this price action is coming to this cluster of consolidation here, which was tested in the past. And then you also have this cluster of these lows here from January, February of 21, and then you have this trading range here from July of 2020, and then this massive trading range here in December of 2019, a massive range here in 2017 and 2018. So the price is coming to that level, and it's likely that we could possibly see some profit taking. So anybody who's short might be looking to take some partial profits at that level, because they might think, okay, the price consolidated there in the past. If we see a sell-off and an end of day close below this range, 13,400, 13,355, 13,280, a weekly close below that level, that would be quite a bearish trigger, potentially opening the way for an extension to the downside, more selling pressure, severe selling pressure, and so on. But from the intraday point of view, we're seeing that the price came down and there's a little bit of a bounce now. You can see it here with this candle here. In an hourly, you have bounce, a little bit of a bounce here, and then in the 15-minute time frame, sell-off, bounce, first higher low, second higher low. So all of this can morph into a very quick bear flag, and this can all sell off very quickly to the downside. And then people who kind of are looking to trade this from a bearish point of view, what they're looking for is they're looking for a sell-off retest, and then they would take the extension of this consolidation here and extend it to the downside, which brings us to that trading range of support that I was telling you about, 13,400, 13,355, 13,280, and so on. Otherwise, if we see a little bit of a bounce and a push higher, and there is a bit of a divergence now between the DAX and FTSE, they're normally correlated, normally to a degree correlated, but we are seeing a bit of a divergence now between what FTSE is doing, i.e. UK 100, and what DAX is doing, which is a German 40 index. So I'm keeping an eye on this. I don't have any orders on DAX just yet. But I'm keeping an eye on it for a kind of intraday trade, and I would pay attention to that. And I'll let you know if I decide to do anything. I'll let you know there again. Just a quick recap. I'll show you my FTSE trade again. This is where we are with the FTSE. So what I've done is I've moved the stop loss closer to the entry. This trade is now in profit. I'm looking at this cluster of the lows here, 7,300, 7,310 for a potential partial profit. Let's see if that happens. And I would likely move my stop very quickly closer to the entry and closer to the entry and closer, and then above entry and above entry, protecting unrealized gains. So just in the case we are coming close to US Open. So, oh, sorry, I've just realized I don't have my. Why is my news feed not saying anything? Oh, okay.
Player refreshed.
Okay. Yeah, here we go. I don't know why. So here we go. FTSE is doing really, really well, slowly moving higher. So what I'm going to do is I'm going to move my stop closer to the entry, down to about 14 and a half points below the entry. So I'm still carrying the risk. I didn't take any profits, but I'm carrying much smaller risk now than before. This position was initially open with 80 point stop, moved to 30 point stop. Now it's 15 point stop. I'm in the money, unrealized profit here, but with much tighter stop. So I'll keep you updated on what's happening with this trade as we go along. And in the meantime, we are just about to look into US markets opening. US markets opening. Hamid, what are you looking at? Are you looking at DAX, or are you looking at any of the US markets? Or Samuel, anything for you? Feel free. Hey, Rose. Hi, Rose. I'll send you the message here. Hi, Rose. How are you? Haven't seen you for a while. How's life in sunny Kenya? Okay, so from the US markets point of view, we have a very quick let me see. Is there anything in the news?
Player refreshed.
It's really strange. My news feeds are not doing anything. Also, like a double for some reason. Never mind. Kenya's all good. Okay, good to see you. Good to see you. I was away for a bit. Again, unfortunately, that family situation, I had to deal with that again. So I'll probably be gone in about 2 weeks' time again for 5 days. So my trips are becoming shorter and shorter now, but I have to deal with this. Unfortunately, it's not a pleasant thing. Yeah, I'll be back here. I'll be back here after that permanently. But yeah, okay. So from the US pre-market open point of view, things that we should know before we start trading. Let me just see. 5 things to start your day. Roaring dollar. US dollar index touched its strongest level in 2 decades, buoyed by still surging treasury yields. Adding to the dollar attraction is the hawkish Federal Reserve, which has commented to a series of half-point rate hikes.
Heads up here. We're 3 minutes away until the bottom of the hour, so we get the US cash equity open for the start of the week.
It's alive. So rate hikes, that's it. However, okay, good. Bill Gates said interest rates are likely to rise enough to secure a global economic slowdown. The billionaire philanthropist and Microsoft co-founder said on Sunday on CNN's interview that the war in Ukraine, which sent commodity prices soaring, comes on top of pandemic, where government debt levels were already high and there were already some supply chain problems. Fears of an economic slowdown are particularly rampant in Europe. Also, in that survey, 40% of respondents were most concerned about a recession in Europe, and another 40% concerned by stagflation, compared with only 20% saying inflation. The growing risk of stagflation is leaving investors without many places to hide, with heavens looking few and far between, according to Standard Chartered Bank. Oil, we'll talk about oil in a minute. I'm looking at some really good levels. I'm looking at 106 level for oil, and it came close to it. I need to, you can't really see it. It's this bit here. That's what I'm keeping an eye on. 106 is a level of interest for me for oil, because of this ban, and I'll tell you about it straight away. Let me just see if there's anything else in here. So we have leaders of the group of 7 nations committed to a ban on the import of Russia's oil to punish the invasion of Ukraine, while Europeans have yet to agree a full halt to imports due to Hungarian resistance. Oil traders are already preparing for a much more difficult regulatory regime in the markets this morning. Crude is lower, with a barrel of WTI for June delivery trading at close to $108. As Saudi Arabia cut prices to Asian buyers, with China's lockdown weighing on demand in the region. Meanwhile, in Russia, there was no sign of Vladimir Putin softening his war aggression in his speech to an annual military parade in Moscow. So this, I'm just reading the headlines, reading the stuff that could be of interest to you before we start trading, but that's where we are. So US markets are open. We can immediately see this is Dow Jones, and I didn't talk about it straight away. So Dow Jones here, from the daily point of view, we are seeing this fairly severe selling pressure. So we have this rounding top here with multiple tops here, top, neckline, shoulder, double top for a head, another shoulder here, sell off, oversold, bounce back, short squeeze, push higher, and then a big reversal. For those of you who traded last week, I was actually standing on sidelines. I wasn't trading. I wasn't in the mood. I wasn't ready. I wasn't in the right frame of mind. My head was in a I was worrying about different things, and I just couldn't read the market properly. And I said, I'm not trading it. But I was watching it. I was amazed to see the reaction after Federal Reserve hiked rates, and the press conference caused the market. Dow rallied 1,000 points. And the following day, a big sell-off as well, retracing all the gains and so on. And then a reaction to non-farm payroll and so on. So plenty of things to talk about, plenty of things to read. But from the trend point of view, this looks quite bearish, and it'll correlate quite nicely with that fears of inflation, and then also a possibility of a fairly severe recession. Trading Indian, hey, hi Raj, good to see you again. How are things? How's Paul? Is everybody else okay? How's Paul? Are you guys looking at anything? I only have one position open. That's long FTSE, Raj. That's all I have. Knowing you guys, you probably have few positions open. Okay, so this is Dow Jones. This is the 4 hourly. yet again downtrending market, and yet again apologies to regular viewers. I'm just looking at trying to find spots on gold. Yeah, we can talk about gold in a minute. Yeah, we can cover gold. I have 1909 as a resistance and 1844 as a major support for gold. These are the two levels that I was looking at as well. Now, where am I with the Dow Jones? So it looks like a selling pressure. For those of you who are kind of new to the channel, you can see I'm using a different templates, and apologies for that again. Yet again, I said I would normally use the charts with no indicators. You know, now you're seeing squiggly lines here. They're called stochastics, and these lines here, they're called moving averages. Nothing majorly complicated, but just unfortunately I left those templates. I would normally have the ones without anything and just talk about basic price action. But from what I'm seeing here is I'm seeing Dow as a fairly oversold at the moment. This is downtrending market, but I wouldn't be surprised to see an oversold bounce back if it's triggered by something, which then creates another lower high, and then potentially we could see another leg lower. But I am not buying this dip just yet. I would like to see some kind of trigger. I would like to see a creation of the first higher low. I would like to see a formation of something that tells me that this low, sorry, this high, this high, this high, this high is broken to the upside. And then I might react to it from a counter trend point of view. But so far, I'm just paying attention to it and looking for the reaction after the US markets open. The only thing that I have open is that FTSE, and I'll show you that again. The only thing that I have open is this FTSE long. Come on. From 70 to 50, and that's where I am. So what I'm going to do right now, I was looking at this low here as a potential take profit. What I'm going to do now is I'm going to move the stop at break even. Now I'm going to move the stop at break even, so just in the case if anything happens, I'll be stopped out with nothing. This is a 15-minute time frame, so it's an intraday time frame chart that you're looking at. I would like to take partial profits around 7,300 if I can. It's a counter trend trade as well, but it was triggered. Analysis of this was done at the beginning of the broadcast, and I'm leaving it running. I'll see how it works. I will be very quick to move my stop above the entry and lock in some unrealized profits as well. But so far, that's the only thing that I have open. That's the only thing that I have open for now. Hamid, are you looking at anything? And Samuel or Rose or anybody else, guys, and anybody else who's watching this, is there anything of interest? The other thing that I was mentioning was oil, and I was mentioning that kind of news talking about the oil embargo and how that might impact the price. I'm paying attention to crude oil from the bullish point of view. I think crude oil is very, very bullish. We're seeing this fairly decent coiling price action here, energy build up, breakout, retest, and a move higher. The current price is above rising trend line. The current price is above multiple moving averages in my book here, and I would be paying attention to this area here. So on this particular chart, that's showing 105.90, but I'm looking at 106. 106. We are not there exactly. Let me see, where am I now? Crude oil is at 106.15 on my broker's platform at the moment. So these are slightly different charts. There's a future here rather than a spot or a current price. So I would be possibly looking to do something with crude oil fairly soon. I'll pay attention to it, and if I do, I'll let you know. I can see this as a rising...
The China 9, Xinhua reporting that China is urging efforts to stabilize foreign firms' production.
Rising trend line here as well. Low, higher low, higher low, higher low. Now, for those of you who are kind of new and say, why did you draw that trend line? How come you didn't connect this low? Because this low here is just a wick in a different time frame. So you can see there's a wick here. This is the closing candle. This, what you're seeing as a full candle in a shorter term intraday, is only a wick here. So touch, major touch, touch, touch. That's how, I mean, I can draw it like that. You can draw it the way you want it, I suppose. But that's a trend line. Trend lines are important because they give us the indication of the existing current prevailing trend, and we want to trade a retracement to that kind of trend line and the bounce of it. That's the basic premise. That's a very, very basic premise for a trend following setup. So I'm looking to potentially get in as close to 106 as possible. 105.85. Okay, not there yet. So there is an hourly time frame. I like this candle. 1, 2, 3, 4. Pause. And then if I go to a shorter term 15-minute time frame, there is a bit of a selling pressure. So that's the area of interest. I'm going to put a little shaded area so that I can react to that if it comes to that. It's not the exact science. Sometimes it's not the exact levels. It could be a range. It could be an area of interest, which could be, you know, 5, 10, 15, maybe even 30 points wide, depending on what market you trade and so on. So I would like to see what happens if the price gets into that zone, and if we see a buyer's return again and defend the price around that level. If that's the case, then I would likely treat this as a swing type trade, and my stop would be quite wide. I would have probably about $2 worth of stop, which is this much. I would have 200 points stop to begin with. But my take profit from the bullish point of view would be up here towards 110 and then possibly 112. So from the risk to reward ratio point of view, it's $5 of gain, or maybe even $6 of gain for $2 of risk. So almost 3 to 1 or 3 to 1 risk to reward ratio. So I would be happy with that to take on that risk. But I need to get a confirmation to get in, and I'll decide what to do if the price or when the price gets there. But that's the basic premise. So the fundamental reason behind it is that news feed that I was talking to you about, which was mentioning oil sanctions and so on. But that's where I am with crude oil. Let me just see if there is anything else worth talking about. Natgas trades 5% down from its previous close on Chicago Mercantile Exchange. Bank of England Sanders, inflation and key measures of longer term inflation expectations are uncomfortably high. Okay. Bank of England Saunders, Bank of England Saunders. Yeah, that's it. Nothing else there. Now let's talk about gold very quickly. Oh, sorry. DAX, guys. Here's the DAX. Still consolidating here. Still consolidating here in something that could potentially break out to the upside as a counter trend trade. A bit of a short squeeze rally. Now let's talk about gold very quickly, and that'll cover loads of it. So this is gold. From a longer term point of view, this looks very bullish to me. We have low, higher low, higher low, higher low. So basically that's the existence of the current trend. This looks like a corrective pullback. We just talked earlier on about a US dollar rally. For those of you who are wondering, this orange line here and this blue line are representing a major support for me. That's a longer term average price or moving average, and also that coincides with the trend line and also coincides with this previous highs here as well. So I have multiple layers of evidence pointing that this area here is a major support level. 1844. This is a stochastic indicator which is showing oversold levels, and yet again, for those of you who are brand new, apologies, I normally don't have any of this stuff on. I normally have just the basic charts with the price action, but it's there, so I'm explaining what it is. If you need to find out how to use it, you can go to My Trading Skills and register. There is a free course on how to trade using stochastics. It's absolutely fine. Check it out. Come on, FTSE, don't
Further comments coming through now from Bank of England Saunders. Uncomfortable with where inflation expectations are.
So gold potentially is forming something that could be described as a bear flag. This type of patterns, they have the tendency to kind of flush to the downside for a bit more.
And at the levels of interest rate below 1% are clearly below neutral in the UK.
My FTSE trade is not looking that well at the moment. Sorry, I'm talking about gold and I'm paying attention to what's happening with FTSE, and I think I might be stopped out. I'll leaving it on. But that's the area, 1844, around there, which could be of interest. So these lows, 1849, 1850, around there, 1844, 1844 would be of interest as well. What I would like to see is a bit of a sell-off from there, from here, and then a rally. Or the other thing that I would like to see is potentially a rally from the current levels and then a breakout to the upside, so something like this, and then pull back for another leg higher. So that will be a kind of a breakout to the upside, but not
Seeing a
ready
continued
for
sell-off in US equities for the start of the week is the S&P 500 now hitting a new 2022 low. And further from Saunders that the neutral interest rate is probably somewhere in the range of 1.25% to 2.5%.
So something like this, rally and a breakout. But no position in gold just yet. As long as we're seeing a US dollar strength, gold will be under pressure. going forward. But that's where I'm with the gold. So 1844 is a big level. 1850, 1844. That's a big level of support for gold. Going forward. I'll show you where I am with my FTSE trade. It's not looking that good as it did earlier. It's still in the profit, but barely. Here we go. There's a reversal. My stop is at entry. I'm not moving it. If I get stopped out, I'll get stopped out with nothing. And if I get stopped out, I'll go and look for another opportunity. I might even go short. I don't know. But that's where I'm with FTSE. Leaving it as it is. I want to see if we get a bit of a reversal from here. But looking at US indices like S&P, Nasdaq, Dow, even DAX now is turning bearish as well.
The Saunders as well noting it's possible that UK interest rates might need to go above neutral. That's if inflation expectations go higher, but not his central scenario.
Which is where we are at the moment. So now we are coming fairly close to the end of today's broadcast. Is there anything else that is there anything else you might need covered? It's almost 50 minutes of this broadcast. I'll try and post, no, I won't try, I will definitely post gold and maybe a few other things in the community. I'll post it in TraderCast with the chart and the analysis.
10 minutes away now to the top of the hour. We do have the release of the final March reads for US wholesale inventories. Month-to-month 2.3% expected to remain unchanged from the prior reading, with orders seeing a range of 2.3 to 2.4% today. On the breakdown, the wholesale trade sales for March month-to-month 1.8% expected versus a par of 1.7.
Okay. We are coming to the end of today's broadcast. Crude. Yes. I think we are coming close to that. Crude. I think I'm gonna go for that crude. So low, double low. This is a good place for me. Happy with that. I'm gonna go my initial trade, and I'm long crude now as well. I'm long crude right now. So let me just show you what I did. This could be a shorter term trade, I'm not really sure, but it came to that low. It tugged a double low, basically double bottom, and I'm going to go for it. I got in now. So okay, so what you're seeing here, this is a 15-minute chart, so there is a 5-minute chart. So a low here, bounce, and then this looks like a morning star formation. 1 2 3 4 5 6 1 2 3 4 5 6 6 red candles, indecision, previous low. Happy with that. My stop is at the right place. Okay, it's early days yet, but I'm currently long crude as well. I'll keep you informed about what I'm going to do with that. I could take partial profits and then let it run as a kind of swing type trade, move the stop higher. But as you can see, my P&L is moving between the profit and a loss because it is literally it's just triggered. You can see you can see where the fill was, and that's it. So I'm gonna let it run and see how that ends up a little bit later as well. Guys, it was lovely
And for the
talking
from
to
Saunders,
you
good
all.
reason to expect the effect of the economy from selling gilts will smaller than purchases.
I'll be back with you tomorrow. I'll be back with you tomorrow at the normal time. In the meantime, if you have access to TraderCast, pop in. I'll post a couple of charts with some levels. In the meantime, stay safe, happy trading, and I'll speak to you all tomorrow again. Thanks, guys.
Continuing as well that gilt sales do not contain a policy signal from the Bank of England, unlike purchases. So Saunders notes that the bank rate is the Bank of England's primary tightening tool, while gilt sales are complementary but not a substitute.